As everyone is joining, we'll give it a minute or so, and then we'll jump in shortly. Thank you for joining us. Perfect. For those that just joined, we'll get things rolling in 30 seconds. All right, great. Let's jump in. Thank you so much for everyone for joining us this afternoon and this evening. Welcome. This is the first of a four-part series with Bank of America to really jump into some of the top questions we're seeing now throughout clients reaching out regarding, number one, their lease and renegotiating or relocating their dental office and their dental office lease, as well as also looking at their financing needs, as well as really talking about, is now the right time to move from being associate to purchasing, right? Is now the right time to add a new point? Is now the right time to take the plunge into practice ownership? So really looking forward to, I know there's been lots of courses these days. Really want to encourage everyone to be as interactive, keeping it conversational as possible. So as the additional moderator tonight, feel free to use the question and answer period. We'll definitely cover those as we go. Great to see some familiar faces joining us again, and really making sure that we can make this really customized based on the individuality of those in the room, as well as to help make sure that we make this right about you. So welcome on board. We have two fantastic additional speakers with us. It is my pleasure to introduce Ben Stewart. Ben Stewart has been one of our key partners and resources for probably well over a decade now. Ben really gets the business side of dentistry and really to help the dentist with a holistic approach. And Ben is the Senior Vice President overseeing the Southeast region, is a fantastic resource, and himself and his team have certainly helped many clients at Cirrus and vice versa over the years. So Ben, thank you so much for joining us.
Excellent. Thanks, Eric. Great to be here. Looking forward to it this evening. Yes, and it's been a great partnership with Cirrus over the many years we've been together. So looking forward to it. Thanks.
Fantastic. Thanks, Ben. And then also Matthew Donato. Again, a lot of the requests from clients is, what's the market doing? What's the impact of COVID? What's the Delta variant doing, and Epsilon, or God knows what may be coming. So from that perspective, let's look at least the data. Let's look at the data, as well as let's look at what some of the analytics are showing the future may come to hold. And myself, as the president of Cirrus Consulting Group, very proud to share some of these key information. So before we jump in, we're going to pull up a quick poll. So if you have a moment, don't poll and drive. I see a few of you have already sent through some of the additional lease risk assessment forms. We appreciate that. But there's a quick introductory poll. So again, we'll customize it. This won't be shared with the group. We just want to see, again, what's the purpose of joining the webinar? Knowledge, specific guidance, help with the lease, or curious about market rates. And then also the situation, right? What stage are you at now? Are you looking to buy or build? Are you looking to expand? Are you looking of transitioning and selling in the next 5 years? Or are you going to hunker in, right? Dig in and renew the lease and make sure that you're helping to align to current market rents based on all the vacancies and rise in vacancies that we've seen. Are you looking to buy or build, right? Do you have a business today and a building? Do you have a lease with those? So that's question 2. Question 3, when your current lease does expire in terms of time frame. And then number 4 is, and we'll touch on this, but certainly a lot of clients have already reached out looking for some help or have already emailed a copy of the lease. They click yes. Myself and one of the team will be able to connect and to help make sure that we can help highlight the customized or the specific red flags within your lease as well. All right, we have a ton of information to go through and let's jump in. So everyone will have an opportunity to update the poll and let's jump in. All right, so really what's the purpose of today is a few folds. First of all, we want to make sure that let's get an update of the facts. What does the data show? What's the impact of the data? And where do we see things going? Obviously, our crystal ball is as good as yours, but we do want to look at trends. We do want to see some history and see how that might be a great opportunity for your specific market. Number 2, we want to help not to make everyone an expert in lending or in the dental office lease, but to walk away with a greater appreciation of its importance, what it means, and how important it is that it's structured properly with dental specific language. And we'll explain what that is as well. Also, we want to touch on a lot of the things that we see a lot of clients asking about. Where are the biggest red flags? Where is there risk, liability, or exposure that you may or may not be aware of? And what can be done now to leverage the impact of COVID or otherwise to help improve that situation, right? As well as talking a little bit about certainly, again, to take away some of the fears about opening and jumping into private practice. Perfect. So a little bit about us and the firm as a quick heads up. We're pretty unique. We're the only healthcare specialized tenant representation firm across North America. We've got 27 years in the business, over 12,000 successful lease negotiations, and we've become the household name for dental office lease negotiations. And the structure is unique. We have lawyers on staff, we have a full lease negotiation team, as well as consulting departments, which Matthew is a member of, to help ensure that we can look at not only the financial components, but also looking at how we can properly draft proposals and otherwise to help protect you all the way through your eventual sale and transition. So from that perspective, Ben and I have spent a lot of time, let it be Greater New York, pre-COVID, also through the Yankee, pre-COVID, Atlanta, and beyond. So looking forward to a great event, and obviously very humbled with hundreds of 5-star Google reviews. All right, let's jump in. The data that we're going to see. We have an incredible investment for our own proprietary data as well as our proprietary license data that can help ensure that if you're wondering for an instant, what do rental rates look like in my market, right? What's the trend lines look like? Right? Who actually owns my building? What are the sales trending? What is the leasing activity in my area? Right? By reaching out, you can email us and we're happy to pull up that data and do a comparison to your situation and your lease to look at base rents, annual increases, common area maintenance, et cetera, to help make sure that we're squeezing every penny and am I paying fair market rent or not? So with that being said, to the crystal ball, obviously some of these are looking at some of the extrapolations using our license data. And of course, right, we don't have the crystal ball any more than you do. So no guarantees or predictions, but certainly let's show you some of the data. So I want to pass it over to Matthew Donato, who is our specialist looking over the Southeast US. Mr. Donato, over to you.
Excellent. Yeah, thanks, Eric. And so really for the purpose of this, want to give everybody in attendance tonight kind of the overview of what your market is looking like, as well as what are we seeing on a national level as well. Right, as Eric mentioned, for any of you that are interested in knowing more about your specific submarket or your building, please feel free to reach out to either myself or Eric. We're happy to go through that with you in a much more granular level. Right now, first of all, what we're seeing here is the national market rent growth. So as you can see, we saw a bit of a dive there in 2020 and some upward trending growth coming into 2021 and is expected to go beyond. Now, while looking at the national availability rate, you can see that the actual percentage of vacancies and the availability in the commercial real estate market is continuing to grow. right? We're seeing that from here, from 2020 all the way up through 2021, expected to go on along some of the same trends. Now, there's a couple reasons behind that. One of which that can be is that commercial space and development is popping up a lot more frequently. There are a lot more developments underway, and therefore the availability is growing, right? Another argument that can be made, which can be seen in the next slide as well, is the national leasing activity affecting some of that availability level. So as we can see here, over the past 10 years, we're looking at roughly just over 400 million leased square feet per year, right? Obviously now moving towards 2020 and 2021, we saw that drop off. Now, once again, some of this can be attributed to development, but also what we're seeing over the course of the last year and a half is that a lot of those retail stores that were affected by COVID due to shutdowns and so on and so forth would have possibly gone out of business, number one. Another reason here is that with that, a lot of the companies that were working in office have now decided to work from home. Now, where you're seeing a great deal of this stay strong is within yourselves, the dentists and the healthcare community, those individuals and those practices that cannot go to that working from home model and need that physical location. So as we can see here, I wanted to give just a brief snapshot of some of the trends that we're seeing. And now what you will notice across a lot of these is that they almost mirror each other in a certain way, shape, or form in terms of trends, not necessarily in terms of price per square footage or the actual vacancy rate, but the trend is staying somewhat similar. So as we can see here, once again, through the end of 2020 and into 2021, we watched some of that vacancy rate drop off while market rents are staying strong. The same can be mirrored here in Orlando. And basically what this is saying is that there was a bit of a lull. We all saw it in terms of the price per square footage. But as looking forward through these projections, it does appear that we're looking at some additional growth in terms of the rental rates. Once again, like I said, just giving you that brief snapshot, a lot of these trends are one and the same. You know, it's simple supply and demand that we're looking at here, and those market rental rates are expected to increase. And that is part of why it is so important to, if you are considering whether it be to start your practice or looking at the renegotiation of the lease agreement, getting in before these rents take another jump is very important in terms of the leverage. Like I said, similar trend. Atlanta was not as affected as some of the other areas. Atlanta was one of the few cities that actually stayed relatively unbothered throughout the entire course of the last year and a half. Whereas you can see some of the trends in the vacancies in Charlotte, for example, with a bit of a stagger there towards the end of 2020 into 2021. So thank you, Eric. So like I said, very, very, very similar trends that we're seeing here across the way. And like I said, it's important to see where that leverage is now, so you're not getting caught up into those rental rates that are projected to increase at a very high level over the next 2, 3, 5 years.
Perfect. Great. Thank you, Matthew. So a couple of core components to keep things moving along. I think the key takeaways are understand the local market and let it be, if you're buying or leasing, right, the importance of the lease. So it's not just about the rent, right? But the way you should be looking at it, especially those contemplating private practice, those contemplating buying the next location, or for the doctor today that I had a long call with, who is taking a 5,000 square foot space and adding another 3,000 square feet to it, right? When looking at it, what is the lease? It really is, under all the seminars and webinars we do from coast to coast to coast, what does it boil down to? Ultimately, it's the check. Right? It is the largest single check that you will pay to one single entity, personally or professionally, in most people's entire lives. right? When you're looking at your base rent, annual increases, and the 10, 20, or 30 plus years that you're in that same location, right? You need to look at that lease as you're signing it on the trunk of a broker's car, looking at it as what could be a multi-million-dollar commitment. And it's far easier to do it on the front end than it is to do it later on. So taking that proactive approach, taking that appreciation of that check, what an amazing opportunity to be a landlord. Great, it's just right, $10, $20, $30 per square foot, congratulations, right? Versus actually what you're signing up is something that they're going to recognize, what could be millions of dollars in revenue. So we get a lot of questions about this, and for the doctor in Florida who just filled out the dental office lease risk assessment, who's joined us this evening, that owns his own location, is a core component. So again, there's pros and cons with each, but to stress for those of you that own your own location, meaning that you own your building, right, and you own your practice, there's a bunch of key questions you want to ask yourself. First of all, do you own it personally or is it in your corporation, the building? Does your spouse own it? Do you own it? Right? And then who owns the practice? Is it just yourself? Is it yourself and an associate? Right? What does that look like? But in any case, it is the importance of the lease to separate those two entities are incredibly important. And regardless of right, owning versus leasing, certainly for those that own that think, you know what, this isn't a problem for me. Ask yourself, what is the state of your estate? Right? Heaven forbid, if you were to pass away, what impact would that have? Right? Would there be a difference between suddenly now your associate that owns the practice and your spouse that would then own the building? Without a lease in place, it makes things very messy. Are you using the same credit card to fix the roof as you are to buy a new handpiece, for example? Right? These are the type of things to do the proper planning now with your professional team to make sure that things are properly structured to protect your eventual practice sale proceeds. And unfortunately, through the impact of 2020 and 2021, many doctors found out too late of the importance of the lease and not having some of their estate in order, especially as it pertains to the practice. So for those of you that are on the leasing side of things and lease your space, the question of leverage always comes up. We do some polls every now and again, but it's interesting. A lot of the feedback from clients feels that they have less leverage now than they did before, right? But again, look at it from the landlord's shoes. You are the best tenant on the planet. You have the highest build-out costs of any other commercial tenant. You have the lowest default rate. Right? And principally, once you're in, you bring in incredibly high quality foot traffic. And therefore, also you create a lot of value for the landlord because you're there on average over 26 years. So from that perspective, really make sure that you look at it differently. Don't fall into the trap of saying, you know what, Ben, I've got 4 other doctors that are excited to take over this space tomorrow. You better sign here right away. Right? Do the math, look at what that investment is going to be, and make sure that you plan, prepare, and prioritize. And yes, there's ways of having your cake and eat it too. We've seen some pretty incredible examples of doctors that were just thinking of renegotiating their lease. One in Boston, for example, you can read her 5-star Google review. And we happened to put the fishing pole in the water and see what the landlord up the street would be willing to do. And they were able to come up with over $280,000 worth of tenant improvement allowance because they really wanted to have an established dentist move into their beautiful new strip mall that they had a lot of extra vacancies. So there's a lot of ways of helping to make sure that you're keeping your landlord honest and and ensuring that you're getting the best possible rates. Right? And for those of you that are thinking, you know what, I've got a relocation clause in my lease, I've got a demolition clause in my lease. You know what, I'm not going to be able to sell where I am today. Maybe now is the time to contemplate moving down the street, right? Money is at, very low rates, as Ben will touch on, as well as, just the opportunity to look at your business differently and use this as a bit of a catalyst to say, if not now, when? So touching on those financial components. So if we're looking at this principally from a new start or potentially an acquisition, Right? There are over 7 main financial variables to talk about in your lease negotiation. So there's things like base rent, right? But there's also then the annual increases. We've seen a lot of landlords being very flexible. Instead of just, a 3 or 4% annual increase, we've actually been very successful in ironing out a lot of those, right? Leveraging the uncertainty of what the future may have and helping to make sure that we're getting some commitments, right? For a number of years at one flat rate, then a reset, reflat rate, right? So it's helping to iron out some of those annual increases, which again can save tens of thousands of dollars when looking at that compounding rate over the term. Also, things like common area maintenance. A lot of doctors were shocked to know that even when they were shut down, rent was still due. Common area maintenance in some cases went up. That is negotiable. There can be exclusions to what you cover and what you don't. Right? You may be paying for other tenants in the space for other brokerage fees, legal fees, or otherwise that have nothing to do with your space. To some of the financial components, for those of you looking at expanding or major renovations or otherwise, fixturing period. Many landlords will be opening to providing you from the time that you get the keys for possession to the time that you get you're open, right, and the commencement date. That, right, ideally should be structured as a not responsible for free rent or not responsible for base rent, meaning the fixturing period. But then there's also after the commencement date, after you're up and running. If you're making a long-term, like a 10-year lease commitment, right? Very common to ask for a number of months in free rent, right? And we've got lots of great examples throughout the entire Southeast of hundreds of clients that we've worked with over the years, right? To give the justification, give the examples, and to show why it's specific needs for the dental tenant. Also, tenant improvement allowance, right, with that other doctor we talked about recently, $280,000, or landlord work, right? And another example and another Google review that's through there of a doctor that at 74 was forced to relocate purely because the landlord refused to allow the assignment of the lease. And the new landlord was so anxious to earn that doctor's business that they ended up paying for the entire build-out cost. Of course, that doesn't happen every day. But these are some of the components to help make sure that every dollar of loan, every dollar can be used to help propel your business, to help get you cash flow positive as quickly as possible, and to help make sure that you've got the right foundation to build your practice upon, right? Your business is your location is your business, right? And that location is predicated on this little piece of document that can be 30, 40, or 60 pages long. And unfortunately, most just focus on the first half of the first page. Right. So from that perspective, again, understanding the importance of it, in the essence of time, we'll just cover this at a high level. But this is one clause. Have a quick moment to skim through this to determine what some of the potential pitfalls are with this type of language. At this point in our courses throughout the country, we usually say, who enjoys reading a lease? Right? Luckily, we do it every day, and it's probably the equivalent of me reading a book on advanced endodontic procedures. Needless to say, right, this one clause, look at what's hidden within it. First of all, right, if you notice this in the first sentence, provided that Dr. Joe Black shall remain as the tenant. So even from that perspective, those options are personal to Dr. Black. And if Dr. Black were to try to sell at year 9 of a 10-year lease, even though Dr. Black has 2 5-year options, they're not transferable to the buyer, right? And therefore, from a lending perspective, right, many lenders, if the buyer is looking to have, right, a long-term payback period and there's only a short-term left on the lease, right, that's a major red flag. So term can be a great advantage. So don't just look at it if you're looking to sell. Don't just look at it from your perspective. Look at it through the eyes of the buyer. Also, default. A lot of doctors on the webinar, may be in default today without knowing it. A lot of landlords, as soon as COVID hit, they asked for the financials, right? And if you didn't send them back, usually within a 10 or 15-day period, you could be in default without any notice period requirement from the landlord. If there was requirements that the landlord could ask to have those financial statements from you. So these are the type of things you want to be prepared for. Midway through, any such renewal shall be on the then current standard form lease. Well, what's the point of negotiating if the landlord can reset it every time to be whatever they want? Or next, right? Unbelievable. In no event shall it be less than the rent paid in the original term. So even if COVID or God knows what might happen in the next 5 to 10 years, you're on the world's most boring roller coaster, going up and up and up, right? So from that perspective, just one simple clause that's found in the vast majority of leases can impact a huge amount, can force a relocation at the end of the term, right? Could increase the rent, or it could certainly scare away the buyer. We've seen a few of those examples recently. One example of a doctor who reached out to us from the Southeast. This is a doctor that had a friend that thought it was his friend, the landlord, who signed up a lease, built out a beautiful practice, only signed a 5-year term, and then, right, had 2 or 3 5-year options. So he's working, he's practicing, etc. He's not really thinking about the lease. And then he gets this letter. As you know, your lease expires November 14th, 2018, per section 2.4 of your lease, and you had an option to renew the lease for 5 years at market rate. However, you're required to give me written notice for your intention to renew by not later than 6 months prior to the expiration of the current term. By my calculations, we're required to give this notice on May 14th. So literally 2 or 3 days later, the landlord sends this nasty letter, which you did not do. Please be advised, my broker will be placing a for lease sign in your window in a conspicuous but non-intrusive place. Right? And oh, by the way, at the bottom, if you want to stay, no problems, have your people call my people. Right? Can you imagine getting this letter? Can you imagine the pit in this doctor's stomach, right? From someone that thought was his friend. So doctor is one of the core components for those of you following along with the digital copy of your lease. 2 dates to put in your calendar. Number 1 is, when does your date have your lease expire? And number 2, when is your option to renew deadline? So this is, as we wrap and pass it to Mr. Stewart here, these are just some of the clauses that if you're not aware of, if you're not sure what your obligations are, critically important that you know. Right? I would definitely suggest to, number 1, get a copy of or a digital copy of your lease, and to determine what impact that might have to your long-term career plans, what exposure you might have. And there's a lot of components here. Do you have a death and disability clause? Most do not. So heaven forbid if something were to happen to you, right, that obligation, that debt will pass on through to your heirs. Surrender. If you were to ever leave, would you have to require to return it to pre-dental condition? And for those of you that are month to month, please, in the survey we'll pull up shortly, you could be an overholding, which means the landlord has the opportunity to charge 150 or even 200% of base rent for any of the months that you've been month to month. And they could potentially go back all the way to the time that you became month to month. So from that perspective, what are some of the core takeaways? What are the solutions to this? Doctors, please start early. Typically 24, now in some cases even 30 months is the proper time to reach out to the landlord in advance. Don't get stuck in the landlord vortex, meaning, hey, I'm going to reach out to my landlord. They're going to say, no, I'm busy. Suddenly it's 12 months, right? Oh, you know what? We're not there yet. We're still contemplating options. Suddenly it's 8 months, right? Then suddenly you've missed your option to new deadline, and now you've just fallen into that trap, right? So the best thing to do is to be proactive. Typically, we reach out to the landlord in advance, helping to draft and plan what those letter of intents can look like to help ensure that you've got the best possible strategy in as early as possible. But again, the reason why you're probably here tonight is because you're thinking of it from a Rockefeller glass half full approach. So think of it from a renewals, think of it from a new start perspective. There are some incredible deals that are occurring. And definitely, if you've had the itch to think about expansion or renovation or relocation, or even that, you know what, I just feel like I'm not getting the right deal, or you're thinking of transitioning and selling in the next 10 years, right? Financing, it's an incredible time. The equipment and dental supply partners are obviously very anxious to get caught up for last year. Landlords obviously anxious to fill up the spaces. And there's a lot of great deals being done coast to coast right now. From that perspective, as we wrap, right, the best thing to do is to get all the information first. If you don't have a exercised, counter executed document signed by both you and the landlord, it's not worth the paper it's written on. A lot of doctors, when COVID hit, suddenly realized, oh my God, I don't even know where my lease is. Now we've got a problem. So you should have the original governing lease from 1990, whatever, when it was originally signed, and every addendum thereafter. That should be in your possession to know what changes have occurred over the years. Then think about your long-term goals. Where are you now? Where do you want to be in 2 years, 5 years, 10 years? Right? And how is that aligned to the lease or not? Right? Do you have the term? Do you have the options? Do you have the ability to stay even if you wanted to? And do you have the ability to sell, or how much control does a landlord have? Number 3 is have it professionally reviewed. If you haven't had someone look through your lease, or you haven't gone through it to really look through many of those red flags, it's a perfect time to do so based on, right, what's happened over the past 24 months to be prepared. Then get all the data, right? Don't jump in too soon. Understand what all those market rates are. Look at those comparables to make sure that whatever your initial offer and otherwise are is based on fair current market rents. And then number 5, it's a carefully choreographed game of chess. Think 7 or 8 steps ahead, right? And what's interesting is now we've just gone from step 1 to step 5. What have we not done yet? At this point, we've not picked up the phone and called the landlord. What do most doctors do? They'll skip 1 through 5 and say, okay, I watched the webinar, great, and I'm going to pick up the phone. All right, don't fall into that trap. Make sure that you've got the core plan. Think 3, 4, 5 steps ahead, because the landlord is. This is all the landlord does. They don't place crowns. They don't place implants, right? They don't do any restorative, and they certainly don't do any hygiene. All they do all day, every day is negotiate leases. So know that going in. Then negotiate financials, negotiating the business terms, and don't stop until you get a counter-signed lease. Whew. Okay. So from that perspective, as mentioned before, as an appreciation of everyone's time, if you have not had your lease looked at, if you are unaware of any of these core components or clauses, right, as an appreciation, we waive the fee for the complimentary lease review. And thank you to our sponsors and partners that we have the opportunity here to make sure that, right, if you haven't had your lease looked at, we'd be happy to provide that. So there's a quick poll that we can pop up. Right, it's a quick yes, and we will be able to help pull the market rents. Right, we will also then do the analysis of the lease, and we'll look through the 6, to 12 major clauses, and schedule a quick time to review that with you and your partner, or as necessary, your spouse, right, to help make sure that you've got clarity to at least know what you're up against. And even if your lease might be a couple of years, even if you might own your space, if you don't have a lease. Let's talk about what that looks like. For those of you that own, think about, right? How do you want to bill if you become a full-time landlord? Do you plan to retain ownership of your building post-transition? Right? If so, what does that look like? If the buyer picked up and moved all of the equipment down the street 2 years after you sold it to them, how would you feel? Right? If they wanted to come in and paint it all fluorescent orange, right? Is that okay? If they wanted to completely bulldoze it and change your patient flow and your operatories and everything else, would that be okay? Right. So again, and if you're in a month-to-month situation, I highly suggest noting the urgency on number 3. And again, looking forward to speaking to you personally. All right, perfect. On that note, it is my pleasure to introduce our second speaker to really touch on this in more detail, and getting into some of those core questions that you may be wondering but have never asked, and really thinking about, well, hey, what should I do now? What is the market showing? And maybe now there is the opportunity to help make sure that I've got the right funding in place to plan and accomplish the next step in your career. So on that note, my pleasure to introduce you to Ben Stewart.
Thanks, Eric. Appreciate it. A lot of good information as always. Again, my name is Ben Stewart. I'm the one of 4 national sales managers for Bank of America Practice Solutions. And for those of you that aren't familiar with us, we're the private practice healthcare division of Bank of America. So What that means is our division only works with doctors, dentists, and veterinarians. We started about 1996 in our 25th year. Haven't been with Bank of America that long, but close to it. And so the great thing about our group and our division and how I'm here to talk to you today is the fact that all of our products and services are geared towards the healthcare industry and specifically the dental industry. So we do the majority of our lending is in the dental space. So we've really come to know it and really have a great grasp inside and out in that dental space. So we'll jump into the meat of the presentation here today, and specifically overcoming the fears of practice ownership. You know, the question that we get the most, or the fear that people come to us the most is, can I get financing, right? And understanding what does that look like? You know, theoretically, this is going to be one of the most, you know, expensive endeavors that you'll intake in your career and in your life in getting into private practice if you're not in practice already. And so there's a lot of questions that come along with it. You know, obviously you want to make sure that you're not getting taken advantage of. You understand the ins and outs of practice financing and what it takes. And so hopefully we'll be able to answer some of that, especially in this post-COVID world that we're in today. But first and foremost, let me tell you, this is one of the greatest times to get into private practice if you're not already. And if you're in practice, this is an unbelievable time to take advantage of the most historically low rates we've ever seen. So I've been with Practice Solutions 20 years now. Some of the stuff that we're doing here this year is unlike anything I've ever seen. And I can tell you the rates have never been better than they are even today. So take advantage of it. There's a lot of great opportunity out there. So specifically, we're going to talk about client profile and your credit, right? Financing 101, we'll touch on a little bit, what a loan should look like, some of the pitfalls to be aware of, some of the questions that you're going to want to ask as you get into financing your practice, the cost of doing business, and then really the life cycle of business ownership and what that looks like. So we can go to the next slide. So practice owner profile. And really what this is a picture of yourself, right? So when you go to a lender, they're going to want to get information from you in order for them to make a good risk. And as Eric mentioned earlier, one of the lowest default rate industries in the world, I think, is the dental industry. And to give you a little bit of perspective on that, before we jump into this slide here, is for us, when COVID hit, we stopped lending for the first time in our company history. We stopped lending back in April of 2020. We started lending again in August of 2020. And as you can imagine, we had the world's biggest magnifying glass looking at every opportunity that came across our desk in order to underwrite that deal, to make sure that it was going to be a good deal. Well, fast forward to 2021, and really over the last few months, the way that we look at underwriting deals today is exactly like we did back in 2019 pre-COVID. And what that means is that the dental industry specifically is one of the most resilient industries out there, where our portfolio, which is north of $7 billion, has performed at such a high rate, in the sense that the default rate has never been lower. So they weathered the storm, dentists weathered the storm, and they were set up the right way to make sure that they came out the other side strong. Obviously, we had some government help with EIDL loans and PPP. Hopefully everybody took advantage of those. But I can tell you the industry as a whole has never been better. And that's why the risk to get into practice ownership is so small. So the risk that the bank looks at as we look to lend to potential borrowers and practice owners is really a number of different things: associate work history, income earnings, what does your debt look like, both personal and student loan, and then what kind of savings do you have? And we'll dive into that a little bit more here in a second. But first and foremost, one of the most important things is your credit score. Really, for us, when we look at a credit score, it's really your ticket into the game. It's really the first step for us to have continued conversations. And your credit score is imperative to make sure that you can get that ticket into the game and move to the next step. And really, the one thing that I'll point out on this slide, one thing that people aren't necessarily aware of, as you can see in the buckets down below in the 5 categories, as most people realize, pay history is the most important thing, right? How do you pay your bills? Do you pay them on time? If you pay them on time, your credit score is going to go up. What people don't realize is that your amounts owed is as important as your pay history. So what that means is when you're ready to make that major purchase, whether it's a car, a house, your first time getting into practice, you want to make sure that your balances to credit limits are as far apart as possible. And if you're like me, I've got a Marriott credit card that I put every conceivable expense on to get every point I possibly can to be able to take some trips and some vacations. And so when it comes time to make that purchase, a good tip to know is to pay down your credit cards for a 30, 60, 90-day period before you go to apply, because that will increase your credit score, because your balances will show much lower or zero, and you'll have a much higher credit limit. And again, that's 30% of your credit score. So there's a tip on your credit report and how to make sure that your credit score is high as you possibly can get it. The great thing about the dental industry is that most dentists that we work with have credit scores north of 750. And again, it's a very low risk industry, which is very appealing to banks. Next slide. So obviously there's many types of financing for your practice. As I mentioned before, anything, we can do anything from equipment to project financing, which is startup practices from scratch. Practice sales and acquisitions are a huge piece of our business. Commercial real estate and debt consolidation. So if you are in private practice now, I would encourage you, if you haven't taken a look at where your interest rates are, to take a 5-minute look to see what rate and what terms you have on your current debt to see if there's an opportunity to lower your interest rates. I can tell you we're doing millions of dollars in refinances every single month, lowering interest rates. And even with doctors that have a prepayment penalty, there's a lot of times we can save them money, even having that penalty in place where they need to pay it off. But the two big pieces are the project financings, which we'll jump into, and the practice sales and acquisitions. So especially for those first-time practice owners, we really want to take the fear out of that startup practice from scratch, as well as that practice acquisition, to make sure that you get set up the right way. And really the way that we look at what we do is we're a silent partner with you, right? I mean, if you think about, like Eric was saying earlier today, the longest term or lease that you've got, I mean, that's going to stay with you longer than anything else, longer than a territory rep, longer than a contractor, longer than anybody else that may help you get into practice. And your loan is going to be probably the second longest piece that you've got, in the sense that if you take out a 10 or 12-year loan to open up your own practice, we will be that silent partner with you through that period of time. So we want to ensure your success, because really at the end of the day, if you don't succeed, we don't succeed. And our success hinges on you in that practice. Next slide.
Yeah, I just thought I'd add, a lot of the clients we've spoken to lately, it's, someone said, hey, yeah, someone reached out to me and I just, it'd been a couple of years since I had looked even at my loan. I still have a couple of years to go, but I refied and ended up saving a whack of money. So if it has been, again, if you're looking at, you've got an existing loan and you haven't just gone through the process of saying, hey, that was a couple of years ago, I signed on to that, I wonder what it would look like now. I've heard nothing but great feedback from a lot of our clients on that front. So just another opportunity that might be able to help save some well-earned dollars.
Yeah, absolutely, Eric. And we can tell within a 15-minute conversation if you're in a great spot, or if there's an opportunity for you to lower your interest rate and lower your monthly payments too. So it's a quick and easy phone call that we can make that determination. Thanks for that, Eric. So really the three key pieces after your credit score are going to be your debt, liquidity, and production. And some of this has changed a little bit post-COVID, in the sense that obviously liquidity in the middle is one of the most important things that you have, right? This is really what your rainy day fund is. If there was an emergency, if there was an issue that came up, if there's another quarantine or a lockdown and we don't anticipate that happening, but if there was something that came up in your practice, do you have some reserves to be able to sustain you for a period of time? So lenders really look at that liquidity as your rainy day fund. Not that you need to put that money down to get into practice, but do you have it available? And then obviously your debt is a big piece of that as well. One piece of advice I will give you is that we realize that student loan debt is far and wide, in that, majority of our dentists have student loan debt, and that's okay. It's not going to prohibit you from getting a loan. It's something that we anticipate and is expected, and we roughly see between $200,000, $300,000, $400,000 in student loan debt on every first-time practice we deal with. It's more important that you have that liquidity than it is the debt. So that way, if there does something, if something were to occur, you've got that rainy day fund. And then lastly, production. If you're starting from scratch, we want to see that you've worked as an associate for at least a year to have some of that production capabilities. And if you're looking to acquire a practice, we want to make sure you can handle the workload in that practice that you're looking to buy to maintain that positive cash flow. So real quick, through the process of project financing, right? So if you're thinking about starting up a practice from scratch, this kind of gives you a little bit of a timeline on the steps to take. Obviously, first and foremost is establishing a plan and a budget, right? So, hey, you make the decision, I'm ready to do this. I'm going to open up my own office from scratch. You want to put that plan down. What do you envision your practice to look like and what that will be, as well as start to put some numbers down in a budget. And we'll show you here some of the people that can help you put that budget together here in a second as well. Obviously, you want to get pre-qualified first and foremost, because as you start to talk to commercial real estate or equipment companies or contractors, they're going to want to make sure that you've got financing available before they spend a lot of time. So get pre-qualified, and if you're starting from scratch, you can get fully approved even prior to talking to anybody. Really, the next step is targeting a space and then working with Cirrus to make sure you get the best deal for that space. And I can tell you that 95% of our first-time practice owners end up going into a lease space. And then down the road, they look to build the office of their dreams, whether that's moving into a larger lease space or buying commercial real estate. At that point, if you're not approved for financing, you want to make sure you've got that buttoned up. You want to finalize your design and start on your marketing plan, getting the word out there, how you're going to differentiate yourself, and then the project starts at that point.
That's great.
So these are some of the key people to help you in your endeavor to start your practice from scratch or acquire your first practice, or even if you're looking to build your office of your dreams or expand where you're at now. But all these people play a key role in helping you get to where you want to be. And it's imperative that you work with people that you feel comfortable with. And we also highly encourage working with people in the industry. When you start to pick your contractor, you're going to want to make sure that they know the dental industry inside and out. They have done dental offices before. That will save you time and money. I can tell you horror stories of doctors that we've dealt with where they've had a relative that built houses and they're going to build a dental office, and it's just not the same. With the plumbing and electrical and the cost that goes into building a dental office, is imperative that you've got somebody that knows what they're doing. But really finding the key people in each of these areas that know your industry on the accounting side and on the legal side, they're gonna see pitfalls before you ever see them. They're gonna make sure that you're set up the right way because they've done this multiple times before. So your team is imperative to your success as well as you go through that project.
Yeah, just to add there is you might look at this and say, oh my God, there's expenses everywhere. Well, first of all, these are legitimate business expenses as you're getting things going, but you want to surround yourself with the right people. You want to follow the dollars, who's paid by who, right? Who's really helping to make sure that I accomplish my goals. And again, this is a perfect example to say, look, you know what, do I believe that proactive investment is going to help minimize reactive costs down the line? So, in many of these cases, signing a lease for the first time, you've got one chance to really get it right on the get-go. And it's far easier to do it then than it is 5, 10, 15, 20 years later.
Absolutely. So what should a loan look like, right? And to Eric's point too on some of the costs. So for us, we typically see that startup practices from scratch are somewhere around the $600,000 mark. As you could see, as Matt was talking about, rental rates and availability, it varies by market. So, in places like Nashville, it might be a little bit more expensive to build out that office because the demand is so high in a market like Nashville versus Alabama or, Atlanta for that matter. So it all depends on the location that you're going to, but we typically see first-time practice owners as a GP around that $600,000 mark and as specialists around that $650,000 mark. On the acquisition side, we see much larger dollar amounts because there's obviously a historical cash flow that we as a lender can look into to make that decision to be able to lend more to it because it's seeing patients day one and has positive cash flow. But what should a loan look like? So I'm just going to pick out a couple different things here on this slide. First and foremost is everybody knows that the interest rate is one of the most important things. And you're absolutely right, it is. But there's a lot more that goes into your financing than just your interest rate. So interest rate, just like home mortgages for practices, depending on the length of the term is going to determine what that rate's going to be. And the longer the term that you pick, the higher the interest rate is going to be as well. So it's not always the best idea to get the lowest interest rate because you could do a startup from scratch on a 5-year term for $600,000 in the 2% range, but you'll never be able to make that monthly payment. So your cash flow and your monthly payment is going to be imperative. So rates are important, but your cash flow is even more important. But the things that you want to look for when you're talking to a lender are prepayment penalties, closing costs, right? What are the fees to close the loan? And how does that impact your interest rate? Can you principal reduce your balance, right? Can you pay it down early? Can you pay it off early? And what does that look like? And what is the collateral that you have to put up? Or do you have to put up your house's collateral? That meaning if you default on that loan, that the lender will come back and take your house. So those are the things that you want to make sure that you are fully aware and that aren't buried in the fine print to know what you're getting into, and specifically not just thinking about this practice that you're getting into, but what does it look like down the road in your future growth, right? Are you looking to do multiple practices over the next 5, 6, 7 years? And can that lender grow with you? I mean, those are all the questions that you want to be asking and really having that relationship with a lender and that face-to-face contact, whether it's via Zoom or in person, and being comfortable with your lender is imperative. And because, like I said, they will be your partner, albeit a silent partner, but they will be your partner for a long time.
And the same can be said, when you look at the lease, let it be personal guarantees or indemnification clauses that landlords would want to put in as well. So, a lot of these, while similar, are very important to look at that, to look at this holistically across the board. And especially, what does that look like? You might not think, hey, I'm opening my first practice, I've got lots of debt, hey, let's add on, but no different than the lease. That is to help make sure that it shouldn't be forever and ever, that you've got personal guarantees or indemnification to the landlord, meaning that they can come after you down the line with any additional penalties or damages or otherwise.
Right, absolutely. So real quick to touch on this too, obviously the lender is there for you for the loan, but for many other things, right? So merchant services, payroll, direct deposit accounts, right? Your business accounts. You want to make sure you factor all of those into making that decision and not just necessarily looking at the loan. Because if you do pay that loan off at some point, you're going to be still with that lender most likely for all the other services. You want to make sure that you're set up in the right way. Go to the next. And so real quick on this slide, this is obviously the life cycle of a business, specifically in the dental space, what we see. The one thing that I definitely want to point out to Eric's point earlier today is that we do a large majority of practice transitions throughout the country. And one of the biggest things that will derail a practice transition is the lease, right? The buyer and the seller, they agree to terms. They think this is great. This is going to be the most easiest process in the world. And I've seen more deals come to a screeching halt when it comes down to that lease and the ability to get that lease assignment. There's been many times where that doctor, that dentist is looking to sell that practice and transition out, and they can't. And all they can do at that point, because they can't extend the lease or assign the lease, that they end up having just to sell the patient records and walk away. Because at that point, for them to relocate and build out a new practice to be able to turn around and try to sell it in a year or two is just not cost effective. So definitely wanted to reiterate that from what Eric was talking about earlier, because that's definitely something that we see when deals go sideways in those practice transitions. And lastly, I'll kind of end with this too, is we at Bank of America in our division Practice Solutions, our reps only work with dentists. They are ingrained in the dental industry in the local market. So we've got reps. I've got 20 reps across the Southeast that just understand the industry and understand the key players in every market. They'd be more than willing to set up time to talk to each and every one of you about your specific situation, whether you're in a good spot in your financing or if you need financing, just to answer questions for you. So please don't hesitate to reach out, and we'd be happy to talk to you.
Fantastic. Great.
Excellent.
Ben's contact information. So again, for those of you, we did promise some time for question and answer. So I would encourage you to, I see some hand raisers through. The Q&A section is the best way to post some of those questions, and we'll try to get to as many as we can and keep the lines open to help make sure that everyone's got their burning questions covered. First of all, thank you so much, Ben. That's fantastic. Really helpful to look at things from a different perspective, and a lot of good tips and tricks there that I think will certainly help the doctors make sure that they've got things lined up before getting pre-approved, etc. And ultimately, for those of you in that stage, the first, and at this point, really only major decision is to start assembling your professional team, right? Who works with who, right? Who works well with each other, and how can we make sure that we get there? So a question here, first one, again, that's come through. So how much are patient records worth, and how is it determined? So maybe, doctor, if you can expand on that a little bit. If we're talking about transition strategies, if we're talking about if we're transitioning out and just selling charts, maybe if you can expand upon that. But, you know, Ben, from that perspective, if you are, you know, advising a buyer that might be just looking to maybe build out a new location and buy charts from a retiring doctor close by and needing a loan to pay for those charts, or to maybe, you know, look at buying a practice and then buying charts and trying to combine that, both of that, and taking a bigger bite. What sort of advice would you give to doctors that might be looking at a pretty wide scope and trying to buy or build and then also gobble up some charts as well?
Yeah. You know, it's a great question, and I can tell you, unfortunately, it varies case by case, right? And the factors that vary on what the patient records are worth really depends on how close is the practice to your practice. You know, what type of dentistry are they doing? There's a lot of different factors that go into that, and really the practice brokers out there across the country are the ones that will be able to go in and evaluate that. But typically what we see in this type of situation where there's just patient records, or what we call a merger, is because that the doctor can't sell the space, or they don't have access to be able to sell the space. So if you're on the other side of it and you've got the opportunity to buy patient records, I mean, it's a great opportunity to inject instant cash flow in your practice, especially if you're getting into a startup type scenario and that you've got an opportunity. Not only do you theoretically eliminate a competitor in the same area that you're in, but obviously it helps increase your cash flow from day one. But it's hard to say what they're worth, not having, you know, all the details in it.
And from a leasing perspective, you know, if you're on the buying side, doctor, and you're contemplating, hey, what do I do if I'm buying the practice or buying those records? It's, you know, again, that can be valuable, but are you just adding it on to your existing practice and purely looking at it as a revenue cash flow play? Or is there something else to the long-term strategy? If you're looking at it now, let's say you're on the selling perspective, don't discount the value of the leaseholds. For example, if you're saying, look, I'm done, I just want to walk away, right? What your practice could represent to a potential buyer or to an associate right now, they could potentially save hundreds of thousands of dollars of build-out costs. Now, yes, well, your practice might not be the most beautiful. Maybe it looks like it's sort of back from the 90s or 80s or otherwise. But from that perspective, again, it's much more difficult to open and start a practice today than it was 5 years ago, than it was 5 years prior to that. So for a starter practice, for a new associate that's looking to, you know, take one step in without jumping in with a 2,000 square foot space, and they can be able to take over your lease, and, you know, it's worth a lot more in many cases to sell it as a whole versus the sum of its parts. Beautiful. Perfect. So some additional questions are on the refinance component. Ben, when and how do you assess that refinancing. So for example, a doctor that we spoke to today, had renewed his loan not too long ago, and he was a perfect candidate. So can you talk a little bit more about the refi piece and what might make sense to see if that's a good option or qualifier for them at this time?
Sure. Yeah. So on the refinance side, again, every case is a little bit different, but as I was mentioning before, to sit down and kind of crunch the numbers, right? Where are you at today, interest rate wise? Do you have a prepayment penalty? What can you get interest rate wise with a new loan and the closing costs that go along with that? And really, it's just almost a mathematical equation to say, hey, listen, this is how much you can save over the life of the loan. This is how much you can save, right out of the gate, and help make that decision. So we're seeing a lot with commercial real estate. We're seeing a lot with practice notes, where doctors got in, anywhere from typically 2, 3, 4 years ago. We're able to take a look at those opportunities and look to decrease those interest rates. But really, anybody and everybody that has got a practice note from the last probably 2 to 7 years, it's worth having that conversation. Just either to give you the peace of mind of knowing that you're in a good spot in a good interest rate, or is there an opportunity to make it even lower?
Great. One other component that we get a lot of questions on is, Ben, you've seen hundreds of these in your career. What are some of the key pitfalls or mistakes that some doctors make unknowingly through the process of, not even on the financial side, but as you're looking through the circle of influence? What are some of the key things that if you were to advise a new associate that's contemplating, moving away from working with the DSO and jumping in with both feet, what are some of the top pitfalls that we can that you could help them avoid by giving them that guidance?
Sure. So some of the pitfalls that we see are cost wise, where we've got doctors that want to get into private practice and they want to build out 4,000 square feet, right, and take on a massive debt load right out of the gate as a first-time practice owner. So our advice and what we try to guide our doctors towards is most of the doctors are going to do a smaller lease space in an area that they think that they want to be in for a very long period of time. But don't overdo it when it comes to the fit and finish of the office, right? Go in there. You don't need to equip all 4 operatories or 5 operatories. Start with 2 and then give yourself room to grow. The practices that end up failing are the ones that bite off more than they can chew right out of the gate. They take out loans, more than what they can handle. And so you're better off growing slowly into your practice. It's easy to equip a 3rd or 4th operatory. But it's hard to unwind that, if you're in over your head. So, having the working capital that you need right out of the gate, continue working as an associate until your practice can sustain yourself. Those are some of the key things that you want to take, make sure that you're taking advantage of. And then it's marketing, making sure you get the word out, why you're different and that you're open for business.
Great. Matthew, on that front, you've spoken to hundreds of doctors, many new associates, or many looking at, hey, is now the right time? Same question on the leasing and location side.
Yeah, from what we're seeing and what I've seen over the past year now is, yes, now is absolutely the right time. There is lots and lots of opportunity around the market. I've spoken with a multitude of doctors just to kind of go off what Ben had just mentioned as well, is that there is that opportunity to expand. It is a little bit more difficult if you're dealing with a very large space and you have to kind of crawl your way out of that. But the expansion opportunities for any of you on this evening's webinar that have maybe just the thought of possibly going into that expansion, getting that bigger space, but maybe it's an adjacent unit next door. It has been an absolutely phenomenal time to expand, not to mention the amount of leverage that we've seen from actually just starting up your practice. And these landlords that are very, very hungry to have new tenants, especially dental tenants, that's for sure.
Yeah, it's interesting. Lots of examples where, the adjacent tenant might be a dry cleaner, for example, and without even knowing it, they may be behind or in arrears in rent. And that landlord might be very anxious to give you that adjacent suite and either move that tenant out, relocate them, or move them all the way out. So really, again, if you're seeing that you've weathered the storm, you're seeing yourself coming at the far side, and you're really seeing some opportunity, it is definitely worthwhile at least scratching that itch so you're not looking back 6 months, 12 months, 24 months later when we've got COVID amnesia and the landlords are back to regular business to say, you know what, I only wish I'd just seen what that might have looked like for the business had I made that proactive approach back then. So perfect. On that note, unless there's any additional questions, I see the vast majority are still here. I really appreciate everyone's time. Certainly, if there are additional questions, here's everyone's contact info and direct lines. I know I've seen a bunch of lease risk assessment forms that have been filled out. Thank you, with requested times already. Again, feel free to email us through either myself or Matthew, or certainly Ben, to talk about where they're at, what some of those numbers look like, and most importantly, how to ensure that you're protected getting into the next stage in your career. Really appreciate everyone's time. Ben, thank you so much for joining us.
Thank you. My pleasure.
Perfect. Thanks, guys. Have a fantastic evening. Thank you all for joining, and have a fantastic evening.